Triangle chart pattern is one of the most common trading patterns used in the world. Triangle chart pattern seems to be very common and easy to use. However, once you try to use it, do you feel that this trading pattern is not that useful? Are you struggling to identify triangle patterns on your charts effectively? This triangle chart pattern can seem to be very easy to use, however, it could be very tricky. It often leaves us feeling overwhelmed and uncertain with various methods and rules that are taught by different books and gurus. Today, I'm going to share the most effective way to determine a triangle trading patterns that can increase your win rate in your tradings. After this video, you can say goodbye to uncertainties. Our cutting-edge approach is designed to simplify the uncertainties of identifying triangle chart patterns and make sure you can easily use the triangle chart patterns to trade. Whether you are a seasoned pro or just starting your trading journeys, our method will empower you to make smarter trading decisions and boost your winning rate. We provide you with a clear and proven set of rules for identifying triangles trading patterns. No more guesswork or confusions. We want to ensure that you know when to enter or exit a trade. Our solution is user-friendly and easy to implement. You don't need to be trading expert to start benefiting from it right now. So hello everyone, welcome back to STA Club, the club for stocks, tradings and analysis. This channel is dedicated to provide you with high quality tutorials, guides and insights that demystify the world of tradings. Whether you are a beginner taking your first step in the financial market or a trader looking to refine your strategy, there's something here for you. To stay updated and be the first to access this valuable resource, hit the subscribe buttons now. By subscribing, you are opening the door to a world of tradings and maximize your potentials for success. But before we dive in, a quick disclaimer. The information in this video is for education purpose only. It is not a buy or sell call. So before starting to teach you how to use triangle trading patterns, let me introduce the basics of triangle chart patterns. In the world of technical analysis, triangle chart patterns belong to a group of patterns that signals a continuation of the current market trend. There are three main types of triangle we should pay attention to, which are ascending triangle, descending triangles, and symmetrical triangles. First, we will picture a triangle as a horizontal trading pattern. When the triangle begins to form, it is at its widest point. As time goes on, the market trades sideways, and the trading range gradually becomes narrower, forming the point of the triangles. Now let us break down further. The lower line of the triangle, also known as the lower trend line, acts like a support on the chart. Think of it as a safety net. At this stage, more people are buying the asset than selling it, causing the price to go up. On the other hand, the upper line of triangles, the supply line, represent the overbought sides of the market. This is when investors are cashing in their profit by selling the assets. So there are a lot of different ways and rules to draw a triangle trading patterns. Today I'm going to share one of the most effective ways to determine triangle trading patterns, which is to increase your win rates in your tradings. So first, let me introduce ascending triangles to you. An ascending triangles is a pattern that usually means good news for investors in an uptrend market. It is quite easy to spot and can be clear signals to either start or stop investing in a particular asset. However, there are few things to keep in mind. First, you should see that the price has been going up for a while. The ascending triangles is a pattern that suggests the current trend will continue. Look at the chart and you will notice a shape like a triangle. The bottom of triangle connect the rising lower points and the top of triangle connect the high point. This high point don't have to be exactly the same but should be closer. So when is a good time for buyer to get in? Many experts suggest buying when the price breaks through the top line of the triangles and the trading volume goes up. When this happens, the price often go up by the amount similar to the widest part of the triangles. It's like a green light for investors. Let us move on to descending triangles. The descending triangles pattern is often spotted in downtrend and typically signals bad news for investors. Here's a simple breakdown. This pattern usually appears when an asset price has been falling for a while. It is a bearish signal, meaning it suggests the current trend will continue. If you look at the chart, it appears like an upside down version of the ascending triangles. In this case, the lower flat line of the triangle connects the two low points. These two low points don't need to be exactly the same. Being close is good enough. Just like the ascending triangle, you need to be aware of the trading volume to play a crucial role when the breakout happens. In a simpler terms, when you see a descending triangles in a downtrend market, it often means that price will continue to fall. Keep an eye on the trading volume because it can be a strong indicator of what about to happen. But remember, nothing in the stock market is certain, so always be cautious and do your homework before making an investment decision. Last one will be symmetrical triangles. So far, we have seen two triangle patterns, one from an uptrend and bullish markets, and one from downtrend with a bearish low. Now let us talk about the symmetric triangles patterns. Unlike the previous two patterns, this one doesn't lean to a bullish or bearish tendencies. It's more like the I don't know where I'm going patterns. The symmetrical triangles patterns appear when the market seems confused and doesn't have a clear decisions. It is like the supply and the demand are balanced and neither side is winning. During the uncertain period, the high and low price come close together, forming the pointy end of the triangles on the chart. There is usually not much trading activity during this time because investors are unsure about which way to go. But eventually, when investors figure out which way to go, they do it with a bang. The trading volume suddenly increased compared to the quiet days or weeks leading up to the breakout. The breakout, when it happens, usually goes in the same direction as the existing trend. So if you think about getting into a market after seeing a symmetrical triangles, wait for the breakout point. It's like waiting for clear signals of where the market is finally heading. After trading for so many years, I have discovered that the easier trading method tend to be more effective. This is because they are easier to understand and put into actions. When things are straightforward, it's easier to make clear and confident decisions, which reduce the chance of making mistakes due to confusion or complexities. So, when I'm looking for triangle patterns, I always prefer to use the simplest approach. So let me share the rules of identifying the triangles patterns. First, to spot the perfect triangles patterns on price charts, it typically involves the price touching both the bottoms and the upper trend line 3 times or more. This repetition of touching this line is crucial in shaping the distinct triangle shape that we are looking for. By having both the bottom and upper trend line touch more than 3 times, we can identify a well-defined triangles patterns. The sequence on how the price touch the trend line in a triangle patterns can be different, and what matters is that it touches each trend line at least 3 times in total. In other words, a triangle patterns can be identified as long as there are a minimum of 3 touches on both the upper and bottom trend line, regardless of the orders in which this touch occur. This pattern is valuable because it suggests a period of consolidations and indecisions in the markets, often followed by a significant price breakout, providing trading opportunity for those who can anticipate the directions of the breakout. We can identify the potential directions of the price movement one price breakout from a triangle patterns with significant volumes. When the price breakout of the triangles patterns with substantial volumes, it indicates a strong surge in buying or selling pressures. This breakout confirms that the period of consolidations and indecision is coming to an end. Paying attention to the volume is crucial. A breakout with high volume suggests a greater level of market participants and convictions, making it more reliable. Low volume breakout may be less significant and can sometimes result in false signals. If the price breakout above the highest trend line with significant volumes, it suggests bullish sentiments and the potential for an uptrend. Conversely, if the price breakout below the bottom trend line with a significant volume, it indicates bearish sentiments and the potential for a downtrend. One of the advantages of trading the triangle chart pattern is that we can measure the potential upside or downside of the price. To do this, determine the vertical distance from the initial point where the price entered the patterns to the highest point within the patterns, or the lower points within the patterns. Once you have the triangle's height, you can apply it to the breakout point. Okay, without further ado, let us move on to the practice. So in this chart, can you see any triangle patterns here? So we can see actually the price has touched the upper trend line 5 times and the lower trend line 3 times, forming a clear and big descending triangle patterns. This pattern is usually seen when the market is on the downtrend. So here's how it works. If the price breaks down below the lower trend line with strong trading volume, it's likely to move in directions B. Conversely, if it breaks the upper trend line, it will possibly move in direction A. Since this is a descending triangle patterns, there's higher chance that the stocks will follow direction B, continuing its downward trend. Besides that, let me show you another perfect example of triangle chart patterns. Can you see any triangles pattern in this chart? Maybe you can try to pause the videos and try to find the triangle patterns in this chart. Looking at the chart, you will notice that the price has touched both the upper trend line and the lower trend line more than 3 times, creating a symmetrical triangle. Unlike the other patterns we discussed, this one doesn't lean toward a bullish or bearish directions. In this situation, you should keep a close eye on the price actions and wait to see which way it will break out. The breakout could go either directions, up or down. The market does not have a directions and it is waiting for signals to choose a direction. Once it makes decisions and break out, that's when you want to take actions. So let us zoom in into these triangle patterns, and you can see that actually the price has already break out. So is this a buy signal? For me, it's not really, because when we look at the volume, it actually does not increase significantly, which make a potential of false breakout. In this case, I would not enter this triangle breakout as the uncertainty is high. It will be the end of the video. If you like this video and think this video has been very helpful to you, smack the like button and subscribe to our channel so that you will not miss out our latest video in the future. Comment below for any technical analysis skills you want to learn. Thank you for the like and share. See you in our next video.